Well, hi there, and welcome back to another episode of Let's Talk Real Estate Investing. I'm your host, Sharon Vornholt, and I'm so happy you're tuning in today. My guest today is Dave Dubeau. Dave is a real estate entrepreneur, best-selling author, speaker, and investor attraction expert, which we're going to dive into that, based in British Columbia, Canada. He began his real estate investing career in 2003, doing 18 deals in 18 months. He later switched his focus to client-first rent-to-own deals, and nowadays he invests in multifamily properties. For the last several years, Dave has been the leading authority on helping mom-and-pop real estate investors find money partners and raise capital. Using his proprietary 5-step money partner formula, Dave helps real estate entrepreneurs and his clients grow their portfolio significantly in a record time by attracting investors instead of chasing them. That's a novel thought. Welcome to the show, Dave.
Sharon, great to be here. Thank you so much.
You know, I don't care where you're located in Canada or the US or wherever, the two biggest problems investors have are finding deals and finding the money. And today we're going to talk about raising capital without rejection, which is a fascinating topic to me because you and I talked a little bit before the show, and a lot of people do this wrong. So let's start out and do a little bit of your backstory and tell everybody about how you got started.
Yeah, so when it comes to real estate, I got started doing creative, low money, no money down type deals, a la Ron LeGrand. That was a guy I learned from way back when. And then I took a few years off and became the marketing guy for an up and coming real estate guru up here and helped him grow his company very, very quickly. And I took 4 or 5 years off from real estate. Then I got back into it, started doing these client first rent own deals, which actually required us buying a property for somebody and then rent to owning it to them or lease optioning to them for 2 or 3 years while we helped them get qualified for financing. So that was the first time I actually needed capital for doing deals. And in our market area, at that time, the average price of a house was about $350,000.
Wow.
So we needed around $75,000 to $85,000 for down payments, property transfer fees, closing costs, etc. So like a lot of folks, I self-financed my first couple of deals, used my own capital, used my own credit, all that kind of good stuff, which is a great way to get started. But you hit a limit. You hit the wall sooner or later. You run out of cash, or you run out of credit, or you run out of both. And that's exactly what happened to me. And you know what happens when that happens, Sharon, is that's when the perfect deal lands in your lap, right? That's when the perfect opportunity lands. Yeah, exactly. So that's what happened to me. I had this beautiful rent-to-own couple come in. They were the perfect clients. And we went out house shopping for them, and everything was great. We found them a nice house. And the only challenge was I was short about $85,000 for the down payment. And I don't know if you've ever heard this. Have you heard the expression, find a good deal and the money will find you?
Yes.
Yeah, I say baloney to that. Actually, I'd say something different than that, but let's keep it family friendly. Baloney, baloney, baloney. So I'd heard that a lot and read that, and lots of gurus espouse that. But I knew I needed to do something. So I'd also heard, hey, if you need to raise money, grab one of these and start dialing for
dollars.
Cold calling, all that kind of stuff. I hadn't done that before. I thought, okay, well, I'll try that. So I called, rejected, called, rejected, called, rejected, ding, ding, ding. To be perfectly frank with you, Sharon, I did that about 5 or 6 times. And that's as much as my fragile little ego could handle with all that rejection. So I quit cold calling because it sucks. And then I also heard, you know what, if you got a good deal, go out there and turn every conversation into a real estate conversation. Go out there and network and schmooze. And I'm kind of, believe it or not, kind of an introvert. So that doesn't really resonate with me, but I thought I'll try it. So grabbed my business cards, went to the Chamber of Commerce, went to the BNI, went to Toastmasters, whoever let me in the door, and there's a group of people. I went schmoozing up a storm, handing out my card, collecting cards. And guess how much capital I raised?
0.
Yeah, that's not A-OK, that's 0. That's what that is. That's exactly how much I raised. And so by this time I'm getting desperate. I had to get a 1-week extension on closing, on removing the financing subjects. And that's what I came up with, what I thought was a brilliant idea, Sharon, because I had a good deal. I'd already crunched the numbers. I knew how much I was going to make. I knew how much my investor was going to make as well. So I thought, hey, if I just get this out to enough people, this is such a good deal. It's going to sell itself. Have you ever heard anybody say that? Such a good deal, it sells itself. So I came up with what I thought was a brilliant idea, and I put together a little one-page PDF, and I emailed everybody I knew with this deal. And that was the first time I started getting a little bit of traction, because I started getting these replies coming back to my email. And I was really happy until I started reading those replies. And basically what they were saying, Sharon, was, hey, Dave, hey, buddy, I haven't heard from you in 5 years, or in some cases, haven't heard from you in 10 years. In one case, hadn't heard from me in 15 years. And here's the first thing that's coming out of my mouth is, hey, it's Dave. I've got a really good deal. Have you got any money? I need it. Guess how much I raised there. Not only did I not raise any money, but I shot myself in the foot because I ticked off a lot of good prospective investors. And that's a big mistake I see a lot of other new capital raisers making, is they go out like a bull in a china shop and they screw things up. So needless to say, the sad end of the story was I didn't get the money, couldn't close on the deal, watched my profit go up in smoke, got major egg on my face because I'm in a fairly small town, about 80,000 people at that time. And that's when I decided, you know what, I never want to be in this position of chasing after money again. And that's when I discovered what I call the big lie in real estate, and that is just find the deal and the money will find you. No, here's the way it goes. When it comes to the chicken and the egg, the money always comes first. So what our goal should be, if you ask me, is to have a group of investors lined up, ready to go in the wings. People have already put up their hand and said, hey, you know what, Sharon, when you've got a deal, let me know. I want first dibs. I want in. I'm in. Okay, get a group of those people lined up, ready to go, and then go make offers on properties, because then you're going to have the mojo. Then you're going to be able to go negotiate aggressively. Then you're going to be able to go make offers on properties because you know you can close. Does that make sense?
That makes perfect sense. And it is, it gives you a boldness when you make offers, when you know that you have the funds, that you can close the deal. But yes, I've seen that time and time again, because if you're not plugged in more ways than one is certainly the money, but your network. You talked about your network. You have to stay on top of your network. I think networking is one of the most underutilized yet the most profitable ways to make money, build your reputation of all. So I've been on that bandwagon for a long time. I wanted to circle back a minute and ask you about the 18 deals in 18 months. Were those
Sure.
single family homes?
Yeah, they were all single family homes. They were all, it sounds pretty impressive, Sharon. Some of those deals were pretty houses. A lot more of them were damn ugly houses. So these were problematic properties owned by problematic people in big doo-doo. So it was all these kind of, I did a variety of different things, buying properties subject to the underlying financing, getting people to sign over the deed for $1, doing lease options, sandwich lease deals, doing options on properties, all these different kind of creative deals that didn't require a lot of capital up front. Yeah. And quite frankly, I'm about as handy as a foot. So I wasn't doing any work on these properties either. I was just turning myself into what Legrand calls a transaction engineer. So solving people's problems. Yeah.
That's interesting. So then you made the switch to rent to owns, which, as you said, meant you had to have more capital.
Yeah.
What made you choose that particular strategy?
Well, at that time, the market I was in was a pretty solid market. The property prices were, for our area, fairly reasonable, and they were going up. So it's a good strategy to use in an upward, in a market that's going up, because it's completely revolving. I call a rent home basically like a 2 or 3 year flip without having to swing too many hammers. So it can make a lot of sense. I mean, the big benefit for rent home for a lot of people is you're getting cash flow, but you don't typically have to do the kind of work most landlords do, because your tenant buyer is really a homeowner in training. That's, at least in theory, that's how it's supposed to work. Yeah. Doesn't always work out that way. So at that time, I was doing that because I was looking for a strategy that created more profit more consistently and higher cash flow.
Well, yeah, I love that. You said your tenant is basically a buyer in training,
Yeah, home buyer and training,
home
exactly.
buyer in training. I love that.
Yeah.
Um, so let's talk about what I want to really talk about, and that is raising private money and building relationships with private money partners. I think for me, a long time ago, I used to think, like a lot of people, I need to get some private money. And then somewhere along the line, the shift came about private money partners, which changes the whole landscape of private money lending. So let's talk about that. That is so crucial.
Yeah. So first thing I want to do, Sharon, is I want to put a caveat here and cover my butt because, as you mentioned, I'm up here in Canada. I'm Canadian. Everything I'm going to be talking about works beautifully in the States. We've got lots of clients who are American clients. I have actually what I call a boutique marketing agency, and we help mom and pop real estate entrepreneurs find their own capital, find their own private money, and raise their own capital for their deals. But here's the caveat. The caveat is I'm not a lawyer. I'm not a security specialist. And here's the thing. In both in Canada and the States, we have regulatory bodies that govern how you go about doing this. So each, as far as I understand, each state is different. Plus, you've got the Securities and Exchange Commission to keep in mind. So with everything I'm going to be talking about here today, I'm going to be showing you how to get the low-hanging fruit, how to get started with raising capital, how to raise your first 500 to 500,000 to $1 million, that idea, and how to do that sooner rather than later. But it's really important that you do it the right way for your area. So you need to talk with a qualified real estate lawyer in your area and make sure that you're set up properly before you rush out like the bull in the china shop. Does that make sense? Is that a pretty good cover my butt statement?
That makes sense. And I would assume, I know that I kind of skipped over this, but after you did rent to owns, you moved on to multifamily properties.
Right.
So this the private money part of this works for single family homes. It works for multifamilies. It gets a little, like you said, it gets a little bit different with multifamilies if you do syndications and all of those things. So, yeah, just tell me how that works with you.
So right now, what I figured out a few years ago, Sharon, is, excuse me, I'm not great at dealing with tenants or toilets. I'm not a handy kind of guy. I enjoy the thrill of the chase, but after that, I get bored quickly. So what I do these days is I am actually a money partner with other people. So I am one of the money people. I'm a passive investor in other people's deals at this time. So I'm not out there dealing with the tenants and the toilets on a regular basis. I'm the guy putting up capital.
Yeah, that whole tenants and toilets thing gets just a little bit old, doesn't it?
It certainly does. It certainly does. That's why I was trying to do with the rent to own thing and the whole bit, because theoretically you don't have to worry about that so much. But so again, with that caveat, with that warning, that make sure you go out and get the proper legal counsel before you rush off like a bull in a china shop. I'm going to show you how to the absolute best shortcut I've ever seen for raising capital. Not only that, but when you do this properly, instead of us chasing after investors, we're going to get investors coming to us, people putting up their hands saying, "Hey, Sharon, I'm curious. Tell me about your deals. I'm interested." Because that conversation is a complete 180 from us desperately, creepily chasing after people saying, "Hey, I've got a great deal. Have you got any money?" All right. So that's a major mind shift. And I know a lot of people say, "Yeah, right, Dave." But hear me through, and I'll walk you through 30,000 foot how this works, and you can see it for yourself. So here's how we start. So, and you can probably see this big poster I've got behind me there, Sharon. That's what I call my money partner formula. And it's 5 simple steps, not necessarily easy, but 5 pretty simple steps, which I'm happy to share with you and your audience here today. And step number 1 is, let's create a target group of prospective investors, and let's focus 100% on them. Instead of thinking everybody and anybody with cash and a pulse, or a checkbook that doesn't bounce and a pulse can qualify or could be our investor, which is what most people think when they first get started. Let's laser focus in. And what I'm going to suggest is and you know this from your years in business and real estate, in order for people to do business with you or invest with you, they need to know you, like you. I think I froze up for a second there.
Yeah, say that sentence again and we can edit that.
All right. So Sharon, in order for somebody to do business with you or invest with you, they need to know you, like you, and trust you with their money. Would you agree?
I would agree.
Yeah. So let's focus on a group of people where we've already got the advantage. And that would be with people that we already know, people who we already have a pre-existing relationship with. So what I recommend is let's create a target group of 150 to 200 people that we already have that pre-existing relationship with. And the best place to start is with people that are already in your cell phone. So chances are when we do this with our clients, they typically have hundreds of contacts in their cell phone. They have hundreds more contacts in their email. They have thousands of contacts in their social media. Get them all out of all those places, put them into one place, into an Excel spreadsheet, and then sift, sort, and filter and whittle it down to about 150 people or 200 people who you actually have a pre-existing relationship with, right? If you bumped into this person on the street, they'd know you, you'd know them, you could have a conversation. Does that make sense?
That makes sense. So 150 to 200, that's the magic number, Dave?
Yeah, that's pretty good because most people can do that, or most couples can do that. And really beyond that, we don't really know those people, right? That's pretty realistic for most folks. So that's where we start. We create a contact list. Now, what we want to avoid doing is what I did, which was spamming everybody right out of the gate with our deals. But what we do instead, part of this whole first step is create that list of people and reconnect with them on a personal level first before we start talking business. And what we do for that, Sharon, is we do a very simple 3-step email campaign to those 150, 200 people with what I call a warm-up campaign. So the first couple of messages are really just you reaching out, catching people up on what you and the family and everybody's up to. I like to call it the Christmas letter from Aunt Nadine, because way back in the day, my aunt used to write a Christmas letter every year before the interweb and before cheap long distance. And she would she'd photocopy it, put that in with the Christmas cards, and that's how we kept in touch. So we're going to do a modern day version of this via email, and no sneaky stuff. So we're not trying to subliminally influence people about real estate or anything like that. It's a genuine reconnection. Hey, here's what I've been up to. Here's where my kids are at now. Remind people of your kids' names and ages, or grandkids or whatever. Don't get too carried away, especially the grandparents. You know what I'm talking about.
Yes, I do.
Spouse, what's been going on good in your life, what's not been so great. Like, make it a genuine reconnection. So write an email like that, and at the end of it say, hey, well, that's what I've been up to, but how about you? How are you doing? Please reply to this and let's catch up. And then you send out via an email autorespond to you guys. So don't try and send out 200 individual emails. You'll never do it. Do one email, set it up in an email autoresponder system, something like GetResponse or MailChimp or whatever you prefer, and create it once and send it out to all 150 or 200 people. And then your job is to reply back to them when they get back to you. And don't worry, not all 150 people are going to swamp you with emails. It'd be great if they did, but chances are you'll probably get 15, 20% of those people actually coming back to you. And that's where the money is, in those reconnections, in the rekindling of those relationships. Does that make sense?
Yeah, those are the people that say, hey, I miss talking to Dave. Let me catch up with Dave. And yeah, I would agree with that 100%. They're showing interest right up front.
Yeah, because you're not trying to sell them anything. You're not trying to pitch them anything. You're just, and here's the important thing is, make sure you reply back. So if they take the time to respond to you and catch up, have a genuine reconnection. Very, very important. So that's the first thing. And then the third part of that warm-up campaign, because there's 3 steps to that. The third part is what I call the transition message. This is very important because this is going to give people the heads up that you're going to switch gears. You're going to be doing a better job of staying in touch with them, and you're going to start talking about real estate investing. So my transition message goes something like this. Hey, it's Dave. It's been really good reconnecting with you. Want to let you know that moving ahead, I plan on doing a much better job of staying in touch, letting you know what I'm up to with real estate. Real estate's something I'm doing really well with. I'm very passionate about it. I think it's the best way for everyday folks like you and myself to get an above average return on our money backed by a solid asset, real property. And who knows, maybe sometime in the future, you might even want to partner with me on a deal and share in the profits.
Mhm.
But you know what? If you're really not interested in real estate, that's okay too. You can always click unsubscribe at the bottom of any of my emails, and I'll take you off the list immediately. In the meantime, if you haven't had a chance to get back to me, let me know how you're doing. Please hit reply. I'd love to catch up. Take care. Talk to you later.
That's very slick, Dave. I have to tell you, that is one of the best. You've got to, you tell people you need to have a way to segue into the private money talk, but that is very good.
Thank you. Yeah, that is a beautiful segue. And here's the cool thing, Sharon. A lot of people freak out. They say, well, you're telling them to unsubscribe. Yeah, I am.
Yeah.
If they'd really rather not hear about it, unsubscribe. Now, Sharon, I'm going to put you on the spot. So let's say we've got 200 people in our list. We've done this process and we tell them at the end, hey, if you'd rather not hear about it, unsubscribe. How many people do you think on average would actually unsubscribe?
Not very many. A small amount maybe that would be my guess, because
Your guess is absolutely right.
they're your friend, or they're people so
Exactly.
they're not cold traffic, you're not cold calling anyone. So I would think they might say, no, I don't really want to hear about that, but I like Dave, so I'll stay on this list.
Exactly. So we get typically when we're doing, because this is one of the services we do with our clients, if somebody's got 200 people on their list, typically somewhere between 5 and 8 people might opt out throughout that whole process. And that usually blows most people's minds. Most people say, well, Dave, 90% of everybody's going to opt out. No, we've never seen more than like 10 people opt out of this whole process because of exactly what you said, Sharon. You already have that pre-existing relationship. They already know you. They already like you. Now, here's where the magic comes in. So we've done this. And the reason we want to focus on that core group of people is chances are most of your viewers and listeners don't need a lot of investors to accomplish whatever it is they want to do, at least over the next 12 to 18 months, right? Typically what we're seeing is with 3, maybe 4, maybe 5 investors, most mom and pop real estate entrepreneurs can do whatever they want to do to take their business to the next level over the next 12 to 18 months. Once you get beyond that, then you might have to kick things into gear a bit more. But this is typically all that you're going to need to make that big jump. Does that make sense?
Yeah, and I think you've focused in on something that's important, because the term mom and pop, because that's where a lot of people, they kind of skip over those people. They go for the great big giant syndication deals. When these people, I like to call them repeaters, they're going to be slower, so you may need more of them, but they are people that you can kind of take on a journey, and you can show them, which is fun. I think it's the fun part. You can show them how to grow, and much more so than somebody that thinks they're going to do this other thing over here, this much bigger thing.
I completely agree, Sharon. And I think a big challenge is a lot of so-called gurus think that everybody wants to get to the point where they've got 1,000 doors or 5,000 doors, or they're doing, 100 deals a year or whatever. That's baloney. Most real estate entrepreneurs are mom and pop real estate investors. They want to create an extra source of income for themselves. They want to create, more security in their retirement. They're not looking to become billionaires. And it's a big mistake to assume everybody wants that. So that's our target market, are folks that want to get from self-financing and kind of getting stuck with 1 or 2 or 3 deals to where they can raise their first capital, raise that first 500,000 to $1 million and get to the next level. And if they want to go beyond that, cool. Then you're at the stage where you're kind of ready to start syndicating and doing all that heavy duty kind of stuff.
Yeah, I agree completely. Mom and pops are a great group to work for. Really, if you're teaching them how to screen a tenant, or you're teaching them how to raise private money, I like this. I don't want this to come off the wrong way, but they're trainable, because they know that they need help. Whereas you get more sophisticated people, they'll go, no, I already know that. So,
Exactly.
So tell me what comes next.
Okay, so here's the next step that's really important, Sharon, is you need to be prepared in case one of those people Because with that transition message, if you notice what I did there, said, hey, and who knows, maybe sometime in the future, you might even be interested in partnering with me on a deal and sharing the profits. Well, there's a chance that somebody's going to put up their hand right away and say, hey, Sharon, tell me more about this real estate thing. So we want to be ready for that. And again, for most people that have never raised capital before, who've never done presentations before, who aren't really salesy, that's very scary. So, okay, now what do I do, right? Because that's where the rubber really hits the road. Right. So step number 2 of this whole 5-step process is to create what I call your $1 million investor presentation. Your $1 million investor presentation. So you've got something to show people when they put up their hand. And this should be, in my opinion, it should be a slideshow presentation. So like a PowerPoint or a keynote, something that, especially these days, as we're recording this, we're kind of still in the whole COVID thing and we're uncomfortable meeting face to face. So meet with somebody on Zoom, be able to share your screen and walk them through a simple presentation that's going to show them what you do. I'm going to show them who your power team is, show them a little bit about your background, your experience, show them the big picture about what particular strategy you're focusing on, how it kind of works. Very, very high level. Don't get into the minutia. Big mistake I see people doing is trying to over educate their investors when they really don't want to know that much. And why you're investing, what market you're investing in, and why that makes sense as a market. And then what the big pros are, what the benefits are, and the risks are, and what you do to mitigate or minimize those risks. Now that's a lot. That's a lot to cram in. But we also want to keep this pretty short. So we like our sweet spot for our presentations to be 20 to 30 minutes. So step number 2 is having an effective, well put together PowerPoint or slide deck presentation to show people and getting some practice runs under your belt on how to do that.
Yeah, that's a great idea. And I like that you said you have to address the risk.
Oh, yeah.
Whatever you're doing, whether you're trying to just get somebody to partner with you, you have to be honest. And there are risks involved in everything. But that's not to say that there's not a way you can be perfectly transparent, move on, and then, okay, now here's step 3.
Yeah, so there's actually a lot involved with this part, Sharon. I won't go into it too in depth, but first thing we got to keep in mind is, this is really important, this is a big distinction. Just because you and I and your viewers and your listeners are real estate enthusiasts does not mean that our prospective investors are. In fact, statistic I've seen is that 95% of the general population has never purchased a revenue property in their lives. Their own property, their own house does not count. We're talking about an investment property. So if we assume that everybody we're presenting to is like us, we're making a huge mistake. If we assume that they're really keen about learning the minutia about real estate investing, we're making a huge mistake, because we're going to overwhelm them. We're going to confuse them. A confused mind always says no. Their eyes are going to roll back in the back of their heads. They're going to be bored. So what they want to know is that you and I know what the heck we're doing. But we want to do this. We want to present to them at what I call a Reader's Digest level. So if you remember the old Reader's Digest magazine, it was written for grown-ups, but it was written at a 13-year-old reading level. Same idea with how we present our deals. If you can explain your deal so that an average 13-year-old gets it, that's the level. And I'm not saying that our investors are dumb. I'm just saying, keep it easy, keep it simple, keep it big, broad strokes. And then you brought out a good point. A couple of big things here. Big mistake I see people making is all sunshine and flowers. Everything's beautiful. Everything's rosy. Never showing the dark side or the bad side or the downside to things, right? And there are. If you've been in real estate for a while, everything doesn't. In fact, very rarely does everything go according to plan. Like never. Okay. So a big mistake is to whitewash that, because in the back of your investor's head, they're going to go, okay, when's the other shoe going to fall? Sounds too good to be true. Their BS meter is going to go off. If they even catch a whiff that you're full of baloney, the trust is gone, right? They need to know you, like you, and trust you. The biggest thing is the trust thing, especially because we've got the other two taken care of. So I always like to show people what the downside is. And in fact, Sharon, I like to go overboard. Would you like to hear so I like to kind of go over some frequently asked questions or worst case scenarios.
Sure.
So one of the ones I like to do, like especially when I was doing the rent-to-own deals, was, okay, Dave, what happens? heaven forbid, if you get hit by a bus or develop a crack cocaine habit and fall off the edge of the earth, what happens then? Okay. Now that's tongue in cheek. That's overboard. But in the back of your prospective investor's mind, what happens if you get killed? What happens if something happens to you? What happens if you disappear?
What happens to their money?
Exactly. How am I protected? So I have a little bit of fun with it. I go overboard there, but I answer the question and say, oh, here's how you're protected. Here's what would happen if. So show them what the worst case scenario is, and then show them what you do to minimize that. You're not promising that nothing bad could ever happen. You're just showing them, if that should happen, here's what our plan is. Here's plan B and C. Does that make sense?
That makes sense. And I think you brought up another point that I love, and it's about people aren't always so interested in the real estate end of it. They're interested in growing their money, and they are interested in the fact that their money is secured by an asset that they could sell. Everybody understands real estate, whereas if you're talking Bitcoin or something, they understand real estate. They understand logically that if that this is something that secures their money, then at the end of the day, though, they're not really interested in houses so much, or apartments, or whatever that your vehicle is.
And you know what I found out? Somebody very wise told me that at the end of the day, your investor is investing in you. And the property is just the collateral for that.
Yes.
That was like a bang, light bulb moment for me. Yep. So that's why that trust is so important. That's why you don't want to be, people say fake it till you make it. No, you don't. Especially when you're trying to raise capital. You don't pretend you're something that you're not. You don't pretend that you're bigger than you are. You're upfront with people. You show them what the pros are. You show them what the cons are. But you always show them what you're going to do to minimize those risks. Very, very important. So that's your investor presentation. Step number 3 of the 5-step process. Now that we've got our target group, now that we've broken the ice with them, now that we've got our investor presentation ready to go, now it's time to kick into gear the marketing side of things. So I call this being edutaining and motivating. Edutaining and motivating to the greatest degree you can. And what do I mean by edutaining? Remember that the other person doesn't want to know the nitpicky minutia of real estate investing. They want to know that we know all that stuff. So we want to give them big, broad strokes. I like to talk about the big benefits of real estate. I like to compare and contrast it versus the stock market, bonds, Bitcoin, whatever else is out there. We need to be the biggest cheerleaders for real estate and our particular real estate investing strategy and our particular market. So we want constant, consistent communication coming out around that. Keep it light, keep it high level, keep it kind of fun if you can. And, do as much as you realistically can when it comes to marketing. So I'm a marketing nerd, so I love this stuff. I realized a long time ago, most people aren't, and they hate this stuff. So pick one thing and do it consistently. Pick one thing that you at least don't mind doing. So if you feel more comfortable writing stuff, then consider doing a blog or consider doing an e-zine. Get it out there at least once a month to your list. Ideally, work it up to where you're communicating once a week. That would be pretty good. But start off with once a month and then add more stuff on as you go along, or do it more frequently as you go along. So that constant, consistent communication, don't dive too deep, keep it pretty high level, be the big cheerleader around real estate as a category of investing, your particular strategy. And here's a big tip as well for everybody out there. I know some people do a variety of different things, but you always have to keep in mind, in the eyes of your investor, if you do a whole bunch of different stuff, you're a jack of all trades and a master of
none.
Exactly. So focused with your communications and your presentation around one strategy and one specific market. Doesn't mean you're stuck with that, but when it comes to getting those investors lined up, ready to go in the wings, that's what you've got them on board with. And then if you've got a different kind of one-off deal, you can say, hey, this is a little bit different than what I usually do, but here's why it makes so much sense. Are you interested? Does that make sense?
Yes. So you want to be a specialist rather than a generalist.
Definitely. Yeah, that's a big mistake I see a lot of people making. So that's the whole marketing thing. Be seen as a specialist, not a generalist. That leads us into step number 4, which is really working on creating that credibility and authority and trust in the eyes of your prospective investors. Because here's the beautiful thing, Sharon, and here's why this whole process is allowing us to get the low-hanging fruit. These people already know us and they already like us. We've got that pre-existing relationship, right? Now we just need to really work on having them see us as credible real estate professionals. And here's the big challenge I see a lot of people have, especially mom and pop investors, in their minds, is they say, well, Sharon, Dave, I've only done one deal or two deals or three deals. How can, I know people in my real estate club who've done dozens of deals or hundreds of deals, or the guru that I follow, they got thousands of doors or whatever. Okay, doesn't matter. We're just focusing on being famous as being an authority in the eyes of those 150 or 200 people. That's all we're concerned about. And remember, 95% of the population has never purchased a single investment property. If you even have one deal under your belt, you're already light years ahead of the 95% who don't have any deals under their belt. Does that make sense? It's kind of like, I don't know, like a kid in kindergarten. A kid in kindergarten looks at a kid who's in grade 2 or grade 3, and that kid seems like they're gone, right? Kid in kindergarten still taking nappies, only go to school halftime, all this kind of stuff. They see the big kids, grade 2 or 3, they can tie their shoes, they don't have nappy time, they can write their name, they can add and subtract. It seems like, ooh. Well, same idea here, right? You don't have to be Einstein, because compared to the vast majority of the people that are in your list, you're already light years ahead of them. Does that make sense? So it's a matter of creating that, stepping into that position and realizing that you've got a lot to offer and that you're bringing a ton of value to the table and really owning that expertise.
You cannot be the best kept secret too. This is something that I tell people. You have to get out of your comfort zone. And you maybe mentioned about emailing or sending a newsletter. In today's world, you absolutely have to be creating some kind of content. I know that investors that do that with social media and pictures of their homes. I just bought another deal, really about the most low-tech thing you could ever do. So we have, we do blogs and podcasts and that, but I want people to know you don't have to do that.
No.
There are simple things you can do, but at the end of the day, it's called content. And it is how people find you, and it's the know, like, and trust aspect. It gives you credibility.
Yeah, and one of the biggest mistakes I see people making once they've kind of got things up and going, Sharon, is they stop, right?
Yep.
They get off to a good start, they raise some capital, they shake the tree, and they get that next deal up and going, and they forget about doing the marketing and stuff like that. You've already done the hardest part of the job, so keep it going. Just keep that constant, consistent communication going. Even if it's just one thing a month, that's a good start. That's way better than most people. So just get that constant, consistent communication going. Step into that position of, authority. Realize that you are the leader within that small group of people, 150 or 200 people. You are the real estate person. You are the real estate guy or gal, right? That's how you want to be seen in their eyes. All right.
Yeah.
And then step number 5, it's very simple. Once you've got 1 or 2 investors under your belt, you can start the snowball effect by getting really good testimonials and referrals from your current investors. That's the fastest way to really get the ball rolling, because chances are, if somebody's invested $50, $75, or $100,000 with you, they know other people who could do the same thing.
Yeah.
If they're happy with the job you're doing with them, if you know how to do it, you can get good testimonials. I always recommend video testimonials, and you can get good referrals, warm referrals to those contacts that they have. Does that make sense?
There is no better thing on the planet than a good video testimonial. People look at that and they trust the person who gave the testimonial. So if Sharon said that about Dave, then it must be okay. And it really does work that way. You don't have to build this giant marketing machine right off the bat, but like Dave said, you do have to be consistent. And if that's once a month, and it may be, like you said, what's been going on in my life the past month? I did this, I have this property, I had this, whatever, done it, it really doesn't matter what it is. And you can set that all up, like Dave said, with using email providers so that it happens seamlessly. People think they have to do this one-off thing to people, but you don't have to do that. You can set it up, it can go out automatically, but it is building your authority every single time you do that.
Yeah, exactly. And keeping in touch
Yep.
That constant, consistent communication. Because here's the thing, people also forget, Sharon, we all tend to be really focused on the short term. And you got to remember, just because you want and you need the capital now doesn't mean that all of your investors are going to be ready to invest with you now, right? They might need a little bit of time. In fact, they did a really interesting study. There are these companies that do follow-up phone calls. They're called "Did you buy" calls. So what they do is they follow up with people that showed interest in something for 2 years. They follow up for 2 years. What they found was very, very interesting. Out of 100 people who showed interest in whatever it was, over a 2-year period, about 50% of them would actually buy that thing. Might not be from the original company they showed interest from, but 50% would actually take action and buy that. But here's the really interesting thing. Of that 50%, only 15%, in other words, only 7 of those 50 people bought the thing in the first 90 days. Everybody else, the other 85% or the other whatever that 43 people bought the thing between 3 months and 24 months. This is huge when it comes to raising capital. Just because you want the capital now doesn't mean the other person's ready to invest with you now. But if you kind of burn your bridges and think, okay, if they didn't invest with you now, they're not good, you're missing out on 85% of the value. That's the thing. Let's use that example. Let's say we got 200 people on our list and we do all this marketing stuff and we get 20 of those people to put up their hand, attend a webinar, request a special report, book a call with it, whatever it is, right? They've shown interest. We get 20 out of those 200 people to do that. What this is telling us is that out of those 20, 10 could become investors with you over the next 2 years. Now that's huge. You understand the lifetime worth of an investor can literally be hundreds and hundreds of thousands of dollars to you. 10 of them, huge. That's life transforming. But here's the thing. If you only about, out of those 10, only about 2 are going to be investing with you, ready to invest with you really quickly. The other 8, it's going to take them somewhere between 3 months and 24 months to feel comfortable enough to invest with you. That's the importance of that ongoing, constant, consistent communication. Because if you stop it, you've shot yourself in the foot. Because then you have to
start over.
It's so dumb, right? So hopefully people really understand that. It's the importance of that consistency.
And that's the way it works in real estate with pretty much every type of marketing. And the other thing that I find interesting about private money is, and I would say is don't prejudge people. I have known investors that, I know of one particular investor who was raising private money and she was very successful at it. And some 10, 15 years down the road, a relative came who always drove the really old car that had the original house they bought, looked like they hadn't bought new clothes in 10 years, which they hadn't, but because of that, they had a pile of money. And they said to her, why didn't you ever ask us to invest with you? And she said, in that moment, I realized my mistake. So don't prejudge people based on those things.
Such wise words, Sharon. You're absolutely right. The Millionaire Next Door, the book that was written many years ago, most millionaires don't look
millionaire-ish.
That's why they've got the money, right? They're very good with their money. Now, here's the other thing your friend might not have realized is she did her relatives a massive disservice.
Oh, yes, she does.
Offering them because what kind of returns are they getting? They're very good with their money, but they're probably very conservative. They're probably not getting very much return on their money. We're doing our investors a disservice if we don't at least educate them about the opportunity. Allow them to make up their own mind. We're not going to pressure people. We're not going to manipulate people. We're not going to strong arm people. Let's educate. Let's edutain people. Let's allow them to reach out to us, and let's allow them the opportunity of investing with us.
That's great advice. I think sometimes we still fall back into that trap of, I'm asking somebody to do something for me rather than I'm offering them an opportunity. There's probably the majority of the people out there don't want to own real estate. Like you said, they're not interested. But when it comes to, do you want to get less than 1% on your money in the bank, or would you like to get 12% and a couple of points. Well, then they perk up just like that. Once they understand there is another path to growing their money that doesn't require them to do anything but vet the person they're loaning the money to. Basically, it comes down to that.
Exactly. We're offering them an opportunity to do something they cannot or will not do on their own. We're providing massive value to them. We're bringing an excellent deal to the table. We're bringing the team to the table. We're doing all the work. They're putting in the capital. We're sharing the profits with them. Mm-hmm. It's a very hands-off experience for them if that's how you set things up. And yeah, we that's the important thing. You need to understand we actually bring much more to the table than our money partner brings. It's their part's the easy part. It's just putting in the cash. We got to do all the work, but we can't do our thing without their capital, and they can't get a good return on their money without our deals. So it's a very, very win-win scenario if you set it up properly.
It is a win-win. Well, Dave, thanks so much for coming on the show today. This was a much needed show. When I look forward going into 2021, there are going to be a couple of components. There are going to be a boatload of deals out there for people. You're going to need two things in my book. You're going to need a combination of private money, and you're going to need to know how to do creative deals, which you talked about earlier. I think you're going to see a return to that. So go out. You've got a perfect opportunity to raise private money right now that will set you up to be perfectly positioned to kill it in 2021. That's my opinion. What's your opinion, Dave?
I couldn't agree with you more. That's exactly what I'm thinking as well. I think there's opportunities all the time, Sharon.
Yeah.
I think, the more active that you are in real estate, the more opportunities you see. And the biggest bottleneck most people have, especially if they've been doing the game for a little while, is not even necessarily the deals. It's the capital to take advantage of those deals. So that's why we've really been focusing on this for the last quite a few years, is helping people to do that. Sharon, is it okay if I give people a copy of my book if they're interested?
Yes, absolutely. In fact, I was going to ask you, tell them about getting a copy of your book, and what's the best way for folks to get in touch with you. We want them to be able to do that.
All right. Well, here's what I'm going to suggest. If you'd like to get a copy of my book, which I think you can see behind me, Money Partner Formula, I've spared no time and expense of putting this together. InvestorAttractionBook.com, InvestorAttractionBook.com. I'll trade it to you for your name and your email address, and that will bring you into my world. That's how we can connect. That's how we can communicate. As soon as you get a copy of the book, then we're going to be connected, and that's how you can find out a little bit more about myself and our boutique marketing agency. I can find out about you as well, and we can see if we can help you out.
Well, Dave, I know that Dave has got a great thing going on here. So do yourself a favor and reach out to him. He's the real deal. So Dave, once again, thanks so much for coming on the show. It's been fun catching up again.
Sharon, thank you so much. I appreciate it. Thank you for everything that you do for the real estate investing community. You guys, make sure that you subscribe to this fantastic podcast. Make sure you give Sharon an amazing review because she deserves it. So Sharon, thank you so much. It's been great being here.
Well, thank you, Dave. And I'd like to give a shout out to the listeners too. I appreciate each and every one of you, and that you show up week after week. So please share this show. And like Dave said, if you leave us a rating and a review over at iTunes, I would really appreciate it. So I will see you folks same time, same place next week. Bye for now.